Web Analytics Part 2. One thing that we want to avoid with all this data capability is analysis paralysis, which is when you're so overwhelmed by the data that you're left paralyzed as to what to do. One good way to avoid this is to understand the basic categories of metrics that enable good internet marketing decisions. We're going to divide these metrics into 3 categories: basic metrics, calculated metrics, and manual metrics. Basic metrics are those that come from aggregating the raw data. These basic metrics are the ones that analytics often gives you when you first log into your analytics account. Basic metrics include page views, visits, visitors, time on page, entry and exit. Page views is a pretty straightforward metric. Page views are also called hits. This just records how many times a page was viewed, or alternately, how many times a request for that page hit the server, hence the name hits and page views. A visit can actually include multiple page views. A visit starts as soon as the computer navigates anywhere on the domain and ends when either that computer navigates outside of the domain or sits idle for more than a half hour. So if you go to Amazon and browse around for a while and then go eat lunch for an hour and then continue browsing Amazon, that experience will actually be recorded as 2 separate visits. A visitor is a unique computer entering the site. A visitor can have multiple visits, so a report with visits and visitors will show more visits than visitors. Because analytics records the precise time of each page request, it can record the amount of time that visitors are spending on each page. If a visitor requests the home page at 12:08 and 4 seconds and then requests today's deals page at 12:08 and 6 seconds, it will record the homepage time as being 2 seconds. Now, here's an important detail for page duration. If that same user then closes her browser at, say, 12:08 and 36 seconds, 30 seconds later, the duration for today's deal page will be 30 seconds, but it's not recorded. Analytics can't track the closing of the browser since that doesn't produce a request to the server. So since analytics doesn't know how long the user was on today's deal page, it doesn't record any data for that. The entry is the first page of the visit, and this is often the home page, but of course it can be lots of other pages, especially if you're running lots of campaigns with different landing pages. The exit is the last page of a visit, but this can be tricky for analytics to measure. Analytics counts a visitor close when half an hour passes since the last page was requested from the computer. If you're on Amazon.com for 5 page views and then you enter Google.com into the address bar, you've navigated outside of Amazon and your visit is done. But analytics doesn't know that because nothing has happened to the Amazon servers when you visited Google. So once half an hour passes with no action on the Amazon servers from your computer, then analytics counts that visit as completed and will record the last page that you saw as the exit point of your visit. The next set of metrics we'll discuss are calculated metrics. These are a step removed from basic metrics because, well, they have to be calculated from the basic metrics. First, average page depth. This is the average number of pages viewed during any visit. This is page views divided by visits. Most sites want a high average page depth because this indicates that people are engaged in the content. But some sites want low average page depth numbers, like technical help sites, which want users to find the relevant information as quickly as possible and then leave. Average visit duration is the average length of time elapsed. This can also be tricky to calculate because the visit ends from the viewpoint of analytics after 30 minutes of activity. The calculation of visit duration doesn't include this final 30 minutes. But that also means if a visit was only 1 page, analytics can include that visit in the duration calculation since it has no idea how long the person actually looked at the page before navigating elsewhere or closing the browser in analytics. A bounce occurs every time a visit consists of only one page. Generally, bounces are bad. Someone only saw one page and probably didn't like what they saw. So we want to minimize bounces. Bounce rate is calculated as the percentage of visits that consist of only one page view. Bounce rates can be calculated for an entire site or for a page. Site bounce rate is the percentage of all visits to the site that consist of only one page view. Page bounce rate is the percentage of visits that begin on that page that also exit from that page. Page bounce rates tend to be much more insightful than the site bounce rates, because if you can identify that a page has a high bounce rate, you can examine that page to determine what changes might improve the bounce rate. A high site bounce rate just tells you that there's a problem without indicating where the problem is or what the issue might be. If someone enters the site on the home page and clicks on a link to the home page to navigate to another page on the site, and then clicks the back button, Analytics will record 2 page views on the home page. Unique page views erases this double counting of the page view, so it reports the total number of visits to the site that included a page view on that page. So if someone visited a website and saw the same page 6 times, it will only count that as one unique page view. However, if they left the site and came back again, starting another visit and a page view, that page view would add a unique page view because it would represent another visit that resulted in a page view of that same page. Unique visitors is similar. Instead of counting the total number of visits to the site, it counts the number of unique cookies that reach the website. So if a given computer made 10 visits to the site in 1 week, it would only count as one unique visitor. Of course, if the same person visits a site from 3 different devices, say a work computer, a home computer, and a mobile phone, that would count as 3 unique visitors. Analytics isn't magic. It doesn't know that the same person owns all 3 devices. Last, we have manual metrics. Manual metrics have to be set up by the user because it's impossible for analytics to calculate these metrics without being told how to measure them. For example, analytics can't calculate a conversion rate unless it's told what a conversion is. To do this, the user has to specify a goal for a retail website whose conversion is a purchase. In this case, the user would specify a destination goal, and that would be when the shopper finishes the purchase. She's then directed to a confirmation page or a thank you page. The webmaster would specify the destination goal in analytics by instructing analytics that once the goal was completed, whenever the confirmation or thank you page loaded. Once the webmaster manually inputs the goal, the conversion rate can then be calculated. In addition to a destination goal, analytics allows for 3 other kinds of goals: a duration goal, a goal of pages per session, and an event goal. A duration goal is reached whenever a visit lasts longer than the time specified in the goal. A video site might specify a duration of 5 minutes to indicate that the visit resulted in some video viewing. This site might set up multiple duration goals and have multiple lengths to measure the percentage of visits that lasted longer than 1 minute, 5 minutes, 10 minutes, and 20 minutes. A pages per session goal is useful for blogs or news sites with a lot of written content. The number of pages seen in a session or a visit is a good indicator of the stickiness of the content and how much users kept clicking on additional pieces of content within the site. A site might similarly set up several pages per session goals of different quantities to measure how many pages they can keep readers seeing. And finally, an event goal is a way for a webmaster to track actions that don't result in a new page load. Remember, analytics records page requests from the server, so it doesn't automatically record when a video is played or when somebody likes the site's Facebook account. Similarly, if a visitor leaves the site because she clicks on an ad on the site, clicking on the ad navigates the user to an external site, so analytics won't record that ad click unless analytics is instructed to record that ad click as an event goal. As you might have guessed, the most important manual metric for the site is the conversion rate. And considering the number of times that we've already discussed conversion rate, it shouldn't come as a surprise that the conversion rate is important. So just remember that if you want analytics to report the conversion rate, and of course you do want that, you have to specify the goal in analytics. Revenue is another manual metric that can be set up in analytics. And if you have a retail site that sells several different products, you can pass on the value of each sales analytics so that it records the amount of money you collected from each transaction. You can even set up revenue for non-retail sites, but that gets a little fuzzier. So for example, a company with a lead generation site might want to track the amount of revenue its website is bringing in, but in order to do this accurately, it has to go back and account for each lead that was generated by the website and track whether each lead became a closed deal, and then determine how much the closed deal was worth and add all of that up. And so the process is pretty labor intensive, so that very few lead generation sites will actually track those numbers accurately. Let's say a company knows that in the past 30% of leads have become closed deals and that the average deal is worth on average $60. That's 30% times 200. So in analytics, this company could assign $60 to every lead and get an estimate of the revenue being generated by the website. One final manual metric is the revenue per visitor, and it's mission critical. If you can track revenue in your analytics, then you want to calculate revenue per visitor as total revenue divided by the visits. This tells you how much money on average you're earning from a visit, and therefore it also tells you how much you can spend to get new visitors to your website without losing money.